Today, we are witnessing one of the most unsettling financial moments Europe has faced in over a decade. A crisis that has been quietly building behind closed doors has now burst into the open, catching governments, analysts, and global markets off guard. What is unfolding right now is not simply a dispute over policy, not just a disagreement between nations, but a turning point in how money, power, and geopolitics collide on the world stage. For months, the European Union pushed forward with a bold and controversial plan to transform frozen Russian central bank assets into a €105 billion loan package for Ukraine. Many leaders saw this as a creative solution to fund Ukraine without draining taxpayers. Others warned it was a financial grenade waiting to explode. And today, that grenade finally went off. The European Central Bank, normally cautious and diplomatic, abruptly refused to support the plan. Their message was clear. This could trigger long-term instability, financial retaliation, and a dangerous precedent for global markets. But the shock doesn't end there. The United States, once a strong backer of measures targeting Russian assets, is now demanding a full stop to the EU's proposal. Behind the scenes, Washington is far more concerned than it appears publicly, not because of Russia's assets specifically, but because of what this move could mean for America's own global financial influence. When one major power decides to weaponize foreign reserves, others take notice. And the U.S. may be realizing that if Europe goes down this path, American-held assets in rival countries could become targets next. Meanwhile, Russia has responded with a tone that can only be described as severe. Moscow warns that if these assets are touched, if even €1 is repurposed, then every Western asset inside Russia becomes fair game. That includes corporate investments, property, bank accounts, and more. Analysts fear that Russia could go further by attacking the stability of the euro, restricting exports, or leveraging energy supplies in a new, indirect economic offensive. All of this creates a storm of uncertainty over Europe's already fragile economic landscape. Now, let's slow down and examine what this truly means. Because the deeper you look, the clearer it becomes. This moment is not isolated. It is part of a larger global shift, a world where financial systems are becoming weapons, where central bank reserves are being used as leverage, and where the trust that once held global markets together is showing serious cracks. Imagine the shockwaves if Russia follows through on these threats. Imagine billions in Western corporate assets suddenly frozen or seized. Imagine European companies scrambling to withdraw from Russia overnight. Imagine the euro being hit by a sudden wave of volatility, investors pulling back, and global markets questioning the safety of overseas reserves anywhere. This is not hypothetical.
Fear-mongering. It is the exact scenario that financial experts warn could unfold in the days or weeks ahead if political leaders make the wrong moves. Europe's economy is already under pressure. Slow growth, high energy costs, fragile supply chains, and growing public frustration. A major financial retaliation from Russia could deepen recession risks, weaken the euro, and shake confidence in European markets for years. But the crisis also raises a bigger, more uncomfortable question. If countries no longer feel safe storing their assets abroad, what happens to global finance? What happens to the system that has allowed international trade, investment, and cooperation to function for decades? Without trust, everything becomes unstable. And right now, that trust is evaporating. Let's break down the key fault lines. The first is the failure of the frozen asset plan. European leaders believed they could turn Russia's reserves into long-term funding for Ukraine without sparking chaos. But central banks, especially the ECB, know that once you cross the line of touching foreign reserves, you undermine the entire global system. The ECB's sudden refusal is a sign that even Europe's most powerful financial institution fears the consequences. The second fault line is U.S. pressure. Washington wants unity, but behind closed doors, they also want control.
The United States relies on being the safe haven of global capital. If other countries start questioning whether their money is safe in Western banks, that puts the US dollar's dominance at risk. In other words, the US fears blowback. The third fault line is Russia's retaliation warning. Moscow knows it cannot respond militarily to Europe, but financially, they can and they will if pushed. Freezing Western assets inside Russia is the first step. But the real danger lies in Russia coordinating with other countries that distrust Western financial systems. Nations like China, Iran, or even parts of the global South could begin seeking alternatives to the dollar and euro. This crisis could accelerate the creation of new financial blocs, something the West has feared for years. The fourth fault line is the global market reaction. When major economies fight with financial tools instead of traditional weapons, markets become the battlefield. Stock markets, bond markets, commodity markets, all are sensitive to risk. And when uncertainty rises, investors move money out of Europe fast. A sudden outflow of capital could weaken European banks, reduce investment, and deepen the economic slowdown already underway. The fifth and most important fault line is the precedent this sets for the future. If frozen assets are no longer untouchable, no country will feel safe. Any nation could one day become a political target. Any reserves kept abroad could suddenly be seized or repurposed. This marks a turning point in the world's understanding of financial security. So what does this mean for Ukraine? On one hand, the failure of the EU's asset plan leaves a massive funding gap. Ukraine needs billions to maintain its defenses, rebuild infrastructure, and stabilize its economy. On the other hand, relying on controversial financial measures could create long-term consequences that outlast the war. International support must be sustainable, not dependent on risky emergency tools that could unravel global markets. Europe now faces a difficult crossroads. Does it push forward with the plan and risk economic retaliation, or does it retreat and risk weakening its stance on Ukraine? Either choice brings consequences, and either choice will shape Europe's role in global politics for decades. The truth is that we are entering a new era where economics and geopolitics are merging more directly than ever. The balance of power no longer depends solely on armies or alliances, but on financial systems, central banks, currency strength, and the trust that nations place in one another. And right now, that trust is in crisis. As experts warn, this moment could be remembered as the beginning of a new type of economic warfare. A world where financial institutions are drawn into geopolitical conflicts. A world where central banks must choose sides. A world where the future of global wealth becomes uncertain. If the situation escalates, we may see increased market volatility, higher energy prices, new sanctions, rapid geopolitical shifts, and a restructuring of global financial systems that have remained unchanged for decades. This is not simply about Russia, Ukraine, Europe, or the US. This is about the foundational rules of global finance. The rules are changing, the trust is fading, and the world is entering a new financial reality. Stay with us as we continue to track this crisis, analyze its implications, and break down every update as it unfolds. The situation is evolving fast, and the next decisions made in Brussels, Washington, and Moscow could alter the future of international finance. Now, I want to hear your thoughts. Should frozen assets ever be used? Is Europe making a strategic move or a dangerous mistake? And what does this mean for the stability of global wealth? Drop your views in the comments below. If you found this breakdown valuable, hit that like button, subscribe, and stay tuned for more deep dives into global power shifts, financial crises, and the hidden forces shaping our world. But before we end tonight's analysis, there's one more layer to this crisis that almost no one is talking about, and it may be the most important of all.
What we are witnessing right now is not just a financial standoff between Europe, Russia, and the US. It is the early signal of a global realignment. Countries around the world are watching how this plays out, quietly taking notes and making decisions that will shape the next decade. Nations that once trusted Western financial systems are already exploring alternatives. Some are moving their gold reserves back home. Others are shifting trade agreements away from the euro and the dollar. A few are openly questioning whether the West's financial dominance is sustainable in a world where reserves can simply be frozen or repurposed based on political decisions. This crisis, as dramatic as it seems, is not the end. It's the beginning of a larger global shift. And once that shift accelerates, we may see a world with multiple competing financial systems instead of one dominant Western model, reduced reliance on the dollar, weakening America's long-standing financial power, regional economic blocs forming around Europe, Asia, and the Middle East, countries diversifying their reserves to avoid becoming future targets, a new era of financial nationalism where every nation prioritizes its own security above global cooperation. For decades, the global economy worked because countries trusted that rules would not change overnight. But now, those rules are changing, and once trust is broken, it is incredibly difficult to rebuild. So the real question is not just whether Europe will proceed with the frozen asset plan. The real question is what happens after. What happens if countries start pulling billions out of foreign banks? What happens if new alternative currencies emerge? What happens if the global financial order fractures into competing spheres of influence? We could be entering a new chapter of history, one where money becomes as strategically important as military power. In the coming weeks, expect intense negotiations, political pressure, emergency meetings, and a level of global tension that most people won't fully understand until the consequences hit their wallets, their energy bills, and their financial stability. For now, all we can do is watch closely, analyze carefully, and prepare for a world where the old assumptions no longer apply. And as always, we will continue to break down every development, every shift, and every decision that shapes this unfolding crisis. Because in a world this unpredictable, information isn't just power, it's protection. Thank you for staying with us until the end. Your awareness and engagement matter more than ever. If you found value in this analysis, be sure to like the video, subscribe, and turn on notifications so you never miss an update. This is United Voice News, bringing clarity to a world in chaos. Stay aware, stay informed, and as always, stay ahead of the narrative.